Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a senior manager here at Schwab, and this is Advanced Charting Techniques. And today we're going to be focusing on a technical indicator that some traders will turn to when they're looking for stocks that are ready to make an explosive move, either up or down. But the indicator we're going to be talking about today is known as the TTM squeeze. Might be familiar to some of you. It's going to be brand new to others. We'll make sure that we'll go at a pace that everybody can follow. We're going to be placing a trade using that indicator today. Before we get to any of that, though, let me first of all say hello to everybody who's chatting in out there in YouTube land. Hello there, David, Selva Kumar, Bob, Will, Sharon, Ocean Life, Michael, Ahmad, Habib Albi, Life in the Fast Lane, Stephen, Chris B, Robert, everybody else. Thanks for joining us week after week. We really do appreciate your attendance and your contributions here in these live discussions. If you are here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the fact, enjoy the recorded presentation. That's fabulous. But also be aware that you're invited to join us in the live discussion if you'd like to be here. This is a Friday webcast series, and we kick things off promptly at 1 Eastern time. We'd love to have you here. Now, I also want to let you know that my very good friend Ben Watson is going to be hanging out in the chats. Always an honor and a privilege to have Ben. Ben, everybody knows, fabulous presenter, brings a wealth of knowledge and experience to these sorts of discussions. Thanks for having my back there, Ben. Ben's just going to be addressing any questions that I can't get to during the flow of the presentation as long as they're on topic. But Ben and I would also like to issue an invitation to everyone watching, whether it's in the live stream or you're watching on the archive. If you're not following us on X, please do that. It doesn't cost anything to follow us. And it's the best place to connect with your favorite presenters in between the live streams. So you can find Ben there on X at Ben Watson CS. You can find me there at Cameron May CS. But let's get into this. And of course, always a good idea to think about the risks associated with investing and trading before diving in. So bear these important disclosures in mind. The information here is for general informational purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, investment strategy. Schwab does not recommend the use of technical analysis as sole means of investment research, and investing involves risks, including the loss of principal. All right, so with that important stuff accomplished, let's talk about what we're going to talk about. Now, in this webcast series, we have 45 minutes, so I'm going to spend some of that time going and having a look at the markets. So we're going to take a quick peek at the markets. There's something interesting right around the corner that we might want to add some context for. So we're going to take a look at the S&P, then we're going to look at last week's trade, just a quick follow-up, see how it's doing. But then we're going to get to the bulk of today's discussion, which is understanding and implementing this indicator known as the TTM squeeze, which is sometimes employed when a trader's looking for stocks that may be just about set to move to make an explosive directional move. I'll discuss how it's built, how it might be employed, and then we're going to place a trade using TTM squeeze, just as an example in our Thinkorswim platform account. So let's go right to Thinkorswim. And what I wanted to discuss, just wanted to throw this up here for just a moment because I know it's top of mind for a lot of people. It's natural, but take a look at this chart of the S&P 500. I rolled the clock back here to 2017. What is the significance of this blue oval right here? Let me hover my cursor right over that so you can see when that was. January 20th of 2017. Well, we're about to have a changing of the guard in the executive office, and this was the last time that President Trump took office. And so I know that some people probably have wondered, what happened back then? Could it apply today? Obviously, the latter of those two questions is a story yet to be told, and we're looking at a data set of exactly one example. So what happened last time we had this changing of the guard when President Trump took office? Well, there was a quiet period leading into that, and then things ran up. Now, another thing we have to acknowledge, no matter who is taking office, is that the only variable having an influence on markets? No, last time it turns out that the markets had a nice run in the subsequent 12 months, but we also know other things are contributing. And what happened in 2020? We had the pandemic and things changed sharply. So for those that had the question, you just wanted to see technically what was going on around this time the last go round? There we go. Is that a guarantee that this is what's going to happen in 2025? Absolutely not. We'll see. Time will tell. But I just thought with that, it's Friday. On Monday is the inauguration. So I just thought that would be appropriate to bring up. In any case, let's go to current day, though. Let's switch things up. Let's go to a 1-year chart. And I want to reframe things through that technical lens that we introduced a couple of weeks ago. And we're going to be revisiting this on a regular basis in this webcast series. So I introduced something known as the trend value momentum set of indicators on a chart. So I'm going to load those up here. Let's go to our studies. Let's load up our TVM strategy set and see what's going on through this lens. Now, if you're not familiar with this, we have two triangular moving averages applied, a 50 and a 100. We have our RSI and our MACD. So for some traders, they might use the combination of moving averages like this as an indication of trend. And specifically in this case, the trader might be looking to see, is the 50 still above the 100? And that's where it is on the S&P 500 chart at this moment. So that might be a confirmation for some of continued bullishness on the S&P. Now, interestingly, on our value indicator for the short-term potential value, when RSI stretches down below 40 in an upward trending market or stock, that might be seen as an indication of short-term value. And you'll notice we noticed this last time. We were just below 40 and just maybe started to tick back up and through. So upward trend, short-term at least one data point indication of value, not a guarantee. And then finally, down below, we saw that our MACD had ticked from a bright red to a dark red. So possible momentum shift as well. So TVM all looking bullish. We'll see. We'll see if that carries through. But for now, let's say that our technical trader out there has a bit of a bullish bias. Okay. So there's our backdrop on the markets. Let's go see what our stock is doing from last week. We had Costco. We took a position in, just bought 5 shares, $920 per share. We're going to keep our investment of our $100,000 that we've dedicated to this series. We're going to put 5% into each position, 5% or less. It might be a little bit more here and there just because of, the pricing of the shares, whatever. But yeah, generally keeping that in the 5% range as an example here so that we can spread out across a number of example trades. But how's Costco doing? Well, we bought it at 920. It's right now closer to 940. So that's a nice start for that position. We do have a sell order in place to take profits if we hit a price target, or we have a stop in place that will trigger if it falls down to a low of $893. Now, that's not the guaranteed sales price on a stop. That's just the trigger point. But trade's doing fine. I think we'll just let that continue to work. So that leaves us now with plenty of time to get into this new indicator. Now, I saw somebody saying, okay, Paul says, yes, I love the TTM squeeze. Anybody else familiar with the TTM squeeze? This is one of those indicators that some traders will use. So let me clean up my chart here for just a moment. But it's one of those indicators that some traders will use when they're looking for stocks that haven't been doing a lot under the assumption that it could be the proverbial calm before the storm. Have you ever looked at a stock and you see it's just sort of trading sideways in kind of a narrowish range and you think, ooh, this can't last forever? Maybe it can. No, probably not. This can't last forever. And once there's a break in the tilt in the balance between buyers and sellers, maybe we take off in a new direction dramatically, either up or down. Yeah. Jay Richardson said, I've heard of it, haven't used it. Okay. Well, before I apply it to the chart, we're going to clean up the existing study set. But the TTM squeeze, if this is your first time being exposed to it, just understand it's actually a combination of two other indicators. Conceptually, it starts with Bollinger Bands. So a Bollinger Band is also one of those indicators that traders might sometimes use to look for stocks that are set to pop. And specifically, interestingly, what's a primary signal that Bollinger Band traders will look for? Those of you who use Bollinger Bands, you know what I'm talking about already. Yeah, they'll look for what's called a squeeze. Interesting. Bollinger Band squeeze, TTM squeeze, sounds familiar. Yep. let's add our Bollinger Bands here. If you're not familiar with them, let me quickly acquaint you with them. I'm not going to get deeply into it, but a Bollinger Band by default applies a 20-period moving average to our chart as an indication of possible trend and support and resistance, and then it throws on an envelope of 2 lines around that moving average, one above that's 2 standard deviations above, and the other one that's 2 standard deviations below that moving average. And what some traders will look for are times when the bands, when the upper and lower bands squeeze together. That might be an indication that volatility in the stock is kind of settling down. There's our calm. What's the storm? Well, a breakout in one direction or the other might signal, there we go, now the storm's kicking in, now the stock's on its move, and the trader might trade in that direction. A difficulty with Bollinger Bands, though, is that the rules of Bollinger Bands trading, basically, this is one way that these are described, is when the bands narrow together, that's what we call a squeeze. Well, under that definition, this could be a squeeze, couldn't it? Couldn't this be a squeeze right here, where the bands were wider and then they narrowed? They got a little bit wider and then they narrowed a bit. The problem with squeezes is they can happen very quickly, and a lot of them don't amount to much. A lot of false signals on Bollinger Bands. So that sort of begs the question for some traders, well, how much of a squeeze is enough of a squeeze? So let's talk about that. Let me remove this drawing. Let me remove this drawing. And just as the teaser for our TTM squeeze, the way that the creators of the TTM squeeze defined enough of a squeeze was the relationship between the Bollinger Bands and Keltner channels. Now, again, I'm not going to get deeply into how Keltner channels and Bollinger Bands are built, but just to let you know, I have in the past. So if you've never heard of Bollinger Bands, you think, Cameron, I thought we were learning about TTM squeeze. Now I got to know Bollinger Bands and Keltner channels. No, you don't have to. We'll talk about just using the TTM squeeze all by itself. But if you really are interested in a deeper understanding of Bollinger Bands and Keltner channels, what you can do is, first of all, make sure that you're subscribed to our Trader Talks channel. So just go down below the video window right now and click on that subscribe button. That doesn't cost you anything. But the Trader Talks channel on YouTube is where we house previous webcasts. And one thing that you can do there, you can find our playlists of previous webcasts, you can join our live streams, but you can also do searches. Like, for example, if I type in Bollinger, for Bollinger Band, here's your beginner's guide to trading stocks with Bollinger Bands. Or if I want to learn about Keltner channels, here is an introduction to Keltner channels, how they're built and ways to use them. All right. So I just wanted to make you aware of that so you don't feel like, hey, Cameron didn't tell me exactly how these things are built, and now I'm lost. Okay. But a Keltner channel is a variation on the theme of volatility, differently than a Bollinger Band, but it has a shared characteristic, and that is this 20-period moving average. So they all start with the same foundation. It's just with a Bollinger Band, we go up or down 2 standard deviations. With a Keltner channel, we go up or down 2 ATRs. That's pretty significantly different. So I'm going to go to our Edit Studies, and let's add Keltner channels. Click Apply, click OK. And now you can see, now we have 4 lines. Actually, what I might do, let me just make this a little bit easier to see the difference between our 4 lines, because there's going to be some crossing around of things. How about we come up here and just edit our Keltner channels. Let's make that upper band thicker. Let's make it a 3 out of 5. And we'll make our lower band thicker, 3 out of 5. There we go. Just going to make it easier to see. So the thicker lines are our Keltner channel lines. Just 2 ATRs above and below that 20-period moving average. And for a TTM squeeze trader, this becomes a potentially handy definition of a quote-unquote significant squeeze. So let me load up a different chart here. Let's go over here to Google. For Google, I've drawn in some handy lines here to help us zero in our focus. But what are these lines? Well, these are times when not only is our Bollinger Band narrowing, but it narrows enough that it moves inside of our Keltner channel lines. So think about the implications of that for just a moment. We know that our Bollinger Bands are standard deviations over a 20-day period, 2 standard deviations. And if the stock is calmed down enough that the distance between those two, above and below their 20-period moving average, is so narrow that it can fit inside of just 2 average trading days, 2 24-hour periods of trading up or down, that's a pretty narrow squeeze. There we go. So that's what that is. Now, that becomes a significant signal on our TTM squeeze. So let's introduce that indicator now. Let's come over here. TTM, we're going to type that in our studies list. Choose TTM squeeze, not trend or wave or LRC or scalper alert. Let's add that to our chart. Click apply and click OK. So what we're now seeing down here in what I think is kind of a nifty looking indicator. I really like the color schemes. For some reason, they just strike me the right way. But there are a couple of basic elements. Oran says you find having Keltner channels, Bollinger Bands, TTM squeeze used on the same screen, it makes the move easier to see? Possibly, yeah. Ron, in just a moment, I'm going to take this off. Isaiah says, is this similar to moving average envelopes? It is. Yep, not exactly the same, but there are definitely some similarities. There's overlap between those types of indicators and what we're seeing today. But let me just describe some of the basic elements here of our TTM squeeze. First of all, we have a series of, or a string of dots. Maybe if I zoom in, you can see the dots individually a little bit more clearly. So let's zoom in on this period. So you can see that we have these dots running right through the center of our oscillating chart. Okay? Sometimes they're green, sometimes they're red. Now, we also have these histogram bars, bright blue, dark blue, red, and yellow. So let's talk about these green dots first. When we have green dots, what that's just simply signaling to us is that our Bollinger Bands are outside of our Keltner channel lines. That's just a different visual representation of that fact. When the Bollinger Band settles down enough that it slips inside our Keltner channel lines, those dots turn to red. And for a TTM squeeze trader, that puts them on kind of a higher alert. What this might signal is that our stock, which has been trading in probably broader ranges, probably stronger trends, is really starting to calm down, not moving up or down so much, not trading in quite as wide of a range. We're seeing a narrowing of those fields. And so the first red dot represents the first day that the Bollinger Band is inside of the Keltner channels, the first indication of a quiet squeeze. Now, unlike a Bollinger Band, which can squeeze and then turn right around and have one day, and that's its squeeze, what our trader typically looks for is for this condition to persist for at least 5 trading days in a row. So it's not just that Bollinger Bands were able to just nip inside of the Keltner channels and then pop back out, but the trader is looking for for those bands to stay inside for at least 5 days. We're looking for an extended period of calm. When we get an extended period of calm on a chart, for some that might feel like the coiling of a spring. We know that calm doesn't typically last forever, but the longer that it lasts, maybe the signal is the more explosive the move once the calm is over. If we're standing in the eye of the storm and it feels really, really kind of, you hear the word eerily calm? Yeah, that's what this is starting to feel like to our trader, and it might get them a little bit excited. For those that use a TTM squeeze, it's not just a blip. Did we get an example of a blip event? This one's kind of blip-ish. There was 4 days where the Bollinger Bands were inside the Keltner channels, but we're looking for an extended period. Okay, you've probably already started to guess what the trader is waiting for from here. So Stephen says, does the green and red dot and squeeze form after the candle closes, or will they evolve as the candle evolves? It can, yeah. So as soon as we slip inside, so on an intraday basis, Stephen, if the Bollinger Band has gone inside of our Keltner channels, we'll get that red dot. If it slips outside of the Keltner channels, we'll get that green dot. That's a good question. All right. But yeah, this one would be considered a comparative blip, almost a signal, almost. But typically our trader is looking for a longer period of calm. Now, here's the next step here. And by the way, we don't need the other bands anymore. It was interesting to understand how this was built, but we don't need to see that anymore. So with apologies to Ron, I'm going to take these off my chart just so that we can focus our attention on learning about the TTM squeeze, because we're sort of past the understanding of the building of the indicator, okay? But when we've moved from green, a relative period of instability, into a period of red, which is that calm period, on that fifth day, what some TTM traders will do, and look at where our fifth day happened right here, okay? You'll notice that was on October 18th. They might look up their chart and start to look back and say, where were the highs and where were the lows? If this has been calm enough that we're starting to get a TTM squeeze here, how might I draw a channel? That channel can be functional for the planning of a trade. So here we are on that fifth day. That was about right here. And we might look back and say, it looks like our channel highs and channel lows were right where I've drawn them here. And now the trader is just waiting for a breakout. One thing the TTM squeeze does not do is it doesn't predict direction. All we know is that we're going through a quiet period. Sometimes the quiet period will resolve with an up move. Other times it will resolve with a down move. When we get an up move, that might be signaled by a transition from red to green again, as our Bollinger Bands are moving outside our Keltner channel lines. Volatility is expanding again, and the stock is maybe ready to move in a new direction. So when we get that breakout, the trader typically trades in that direction. All right. So here's an example here. It looks like we had one right back here where we got at least 5 days. On that fifth day, they might start to define their channel and then wait for the breakout. Art Vandelay says, can I just use the TTM squeeze indicator just by itself? Yep, conceptually a trader could do that. Some traders just use indicators to trade stocks. And actually, a couple of ways that this might be traded. Art, we'll talk about the entries, but also the exits here in just a moment. But yeah, that could be done. But we had a consolidation back here where price calmed down enough and for long enough, squeezed, pinched together long enough that the trader might have been thinking time to start planning a directional move once we get the signal of the breakout direction. And it looks like we resolved in a bullish move here, signaling, and by the way, it's not the transition from red to green that tells us direction, it's actually the histogram bars color. So Jay Richardson, you say you like this, you're going to start using it. That's great. What I would always suggest is that if a trader is introduced to a new trading technique, try it out on paper money first, see if you like it. Just don't ever take one of these webcasts as my attempt to sell a strategy to someone. Nope, this is just to educate people about the tools that are available on the platform, and then the individual trader can decide for themselves whether it's an appropriate tool for them if they use technical analysis at all. All right, so yeah, we had an example right back here. Interestingly, what's going on with Alphabet right now? Well, 1, 2, 3, 4, 5. We're now on our seventh. We're on our seventh red dot. So we know without looking that our Bollinger Bands are still inside our Keltner channel lines. But I'm also starting to see just the slightest. If I zoom in here, I'm going to zoom in a little bit further. Do you see just a little bit of a blue bar? A little bit of a bright blue bar? Yeah, that might be indicating to our trader this may be setting up to break out to the outside. The confirmation isn't there quite yet. We need to see a green, but maybe pointing in that direction. Sometimes though, we get a consolidation and it doesn't go up, it goes down. So for example, let's look at Oracle. Here's Oracle. Here's our TTM squeeze. Let's look for a period where we got at least 5 dots. So there was one blip, there was another blip, but here's at least 5 in a row. 1, 2, 3, 4, 5. At that point, the trader might look up here and start to define for themselves where's their channel and wait for the breakout. Now, interestingly, the stock kept trading in the channel, but the indicator switched to green. So the indicator is not dependent upon the stock moving outside the channel in order for the signal to happen. No, the signal happens if Bollinger Bands go outside the Keltner channel lines. It's there. But if we start to get red histogram bars, that's a signal that price is anticipated to move downward. Okay, so you see that here. Looks like we had another relative blip right there. Then we had 5 in a row right here, and then a red bar breaking to the downside. All right, so it can happen in either direction. Here's another example of something that's bullish. If we go over to Bank of America recently and we start to look for those extended periods of consolidation, 1, 2, 3, 4, 5. There's our 5th dot. The trader might look here. Where are our highs? Where are our lows? Define the trading range. And then we're waiting for a breakout. Here it looks like it was about March 4th. We transitioned to green as blue histogram bars were indicating. So this was a breakout to the upside, and the trader might be looking for a move in that direction. Similarly, here, similarly, here. Sometimes the trades work, other times it doesn't work perfectly. Nothing works perfectly. There are no perfect technical indicators out there. But that's the construction of the TTM squeeze. That's one of the applications. Now, the question did come in. Art Vandelay said, can we just use it by itself? Yes, another way here, Art, that a trader might use it, if that's their intent, is kind of like the MACD, just trading the lows to the highs for bullish trades. You know, so for example, waiting for a steep dip in the indicator and looking for a red to yellow transition, that may be a bullish indication for a price momentum, and then rising up to the bright blue transitioning to a dark blue, that may be a bearish indication of momentum. Not truly a squeeze, though. This is a different approach. So I wouldn't call this a squeeze approach. This is more of using it like a traditional histogram oscillator. But let's talk about for just a moment, where might the trader take their profits? Well, this is where the definition of the trading range can be so important. So maybe we'll just use Bank of America as our example. We have a few examples here. Let's go back to the first one. On that 5th day, 1, 2, 3, 4, 5, the trader starts to define where our support, where our resistance, there's our trading range, because one of the assumptions of a breakout from a range, which is typified by a squeeze event, is that traders are assumed to repeat historical behaviors. Now, sometimes assumptions do what assumptions do. Sometimes they're wrong, correct? But if the assumption here is that we went into a squeeze, trading in a relatively narrow range, we were signaled time to move in a new direction, how far might we move in the new direction? Well, for some traders, they will merely duplicate the depth of the original range and look for a move of equal proportion in the new direction. So I'm going to right-click. This is just a technique that can be used on a chart on Thinkorswim. Right-click and duplicate our drawing, and I'm going to drag that up here, and that just helps me to visually to sort of illustrate what I'm attempting to explain here. On a breakout, maybe as a minimum target, the trader might look for a move of equal distance to the original trading range. That shouldn't be anything new, I think, to people that trade ranges on a regular basis. So here, right-click, activate that drawing. Oh, I don't want to activate it. I want to duplicate it. Right-click, duplicate that drawing. There's our move, our anticipated move to the upside. And in both of these cases, it happened to work out. It doesn't always work out. In this case, as a matter of fact, it kind of took a while. Right-click on this one, duplicate this drawing, and I'll just position that. No, it actually got there pretty quickly. Never mind. I thought it came up a little bit short. It didn't. But it doesn't always get to the target. Just want to make that point. If we were looking for a bearish trade, let's go back to our Oracle trade. Our bearish traders might employ the same technique. Right-click here. Let's duplicate this drawing and drag down that duplicate and overlap it with the original right there, and that might give us a target down in this range. It is nice sometimes when we look in the past and we say, oh, well, that's an anticipated support level. Kind of lines up neatly with the previous resistance. That's great. That's not always the case either. Let's see what other questions have been coming in. Thaya says, what alternative setting can be kept on Bollinger Bands, Keltner channels, and TTM squeeze? Well, Thaya, yeah, it's a good question. Anytime the trader is looking to speed up a signal, what might they do? Well, they might just use smaller numbers is sort of a general rule of thumb in the construction of the indicator. If we want to speed up a Bollinger Band, for example, instead of using a 2 standard deviation default, we might change that to 1.5 standard deviations. Instead of Keltner channels using 2 ATRs, maybe they use 1.5 ATRs. It narrows the bands and presents faster signals, for better or for worse. Not every time is a faster signal a better signal. Sometimes it leads to more whipsaws. All right, so another way that a trader, if they want to be a little bit more aggressive with the targeting of their upside potential on the TTM squeeze breakout, is they may hold out. Let me see if I can bring up an example here. Maybe we go back to Google. Yeah, with this one, let me right click here. Let me duplicate this drawing. Set that as sort of our minimum target. So interestingly, as an initial target, it went right up there, bounced off, but then it proceeded higher. So what other traders will do is they'll set this as a minimum target, but then as a moving target, they'll look for, after accomplishment of that high, look to see if there's a transition from a bright blue to a dark blue. That's just a secondary way that for some traders they may plan for those exits. One of the nice things about using a channel like this is that it can be a specific price level that can be entered as an order, hey, sell out at this price. If we're using something that's slightly more vague, we can't go into the order screen, place the order and say, dear Thinkorswim, please sell this Google position when my bright blue changes to dark blue, thank you very much, signed Cameron, right? Now, so that's kind of nice when we have a specific price target. For some, that's perfectly serviceable, and that's what they go for. So let me just double check. I always, when I put these things together, I think I'm covering all the points that I wanted to. So let's maybe put together a trade with the TTM squeeze. So I was looking through, and if you're wondering how I found this stock that has a TTM squeeze, I just opened up the S&P 500 component companies. I have them listed largest to smallest, and it just started clicking on some. So this is TransDigm, but if I click on Verizon, I can glance. It only takes a second. So I can go through and look to see if there is a squeeze with an entry signal in literally a second. Tell me, is there a squeeze with a signal on Verizon right now? Nope, because what I would need to see over here are at least 5 recent reds and then a green with a blue histogram breakout. Does Booking have that? Nope. Does Raytheon have that? Or RTX? Nope. Well, actually, it does. Look at that. It has a pretty recent one. So here, why not? Let's zoom in on this just so that we can revisit this. So we started getting reds, 1, 2, 3, 4, 5 on this 5th day. The trader might look back and say, well, where are my support and resistance levels? Looks like as of this 5th day, resistance was up around here. Support probably down around here. And so they can use that. We can actually, let's activate that drawing and pull this out to the right and start to look for our breakout. Looks like we have our confirmation of our breakout right here. And from here, where might be the target? Let's duplicate this drawing. Are we already to our target? We're on our way. There's a little bit of meat left on the bone on this one. That's a little bit late. But you can see how easily, how quickly the trader can just click through here and see if there are recent signals. Nope, nope, nope. So that's how I did it. So going back here to TDG, look at the length of this squeeze. So for all of these days, we had the Bollinger Bands trading inside of the Keltner channels. The 2 standard deviation move above and below a 20-period moving average could be captured inside of just 2 days worth of trading activity. That is pretty narrow. We had big candles, but not net going anywhere. So for some, they see this as a coiling of the spring. And has the spring sprung? Well, according to this metric, it has. So let's right-click here. Let's duplicate our drawing, and I'm going to drag that up. And where does that give us a price objective? Looks like at about I'm going to call it 390. Pardon me, not 390, 1390. Okay. Where might the trader get back out? Well, if the signal was because we're breaking out, well, if we break back down into that previous channel, it might be time to get right back out of the trade. Not every trade works. So in this case, breakout level looks like it's around 1312. If we were to slip back down to maybe even just 1300, maybe even 1305, we're back out of that trade. So let's set our target up there at, let's call it 1390, with a stop down at 1305. So let's go to our trade tab, and I'm going to place that trade. So here's TDG. I'm going to right-click on, it doesn't matter, right-click on the bid or the ask. Either one will give you this menu. And I'm going to put in a custom buy order with an OCO bracket attached. Now, this is a fairly pricey stock relative to lots of others. 1 share is about $1,300. I'm going to do 4 shares. That's about $5,000. That's about the cap on what we're going to be spending on trades in this webcast series. So let's click on the little broken chain link, link our buy order with our sell orders. We'll change this to $4. $4. 4 shares. I'm going to switch this to a market order. Obviously, I'm doing this in the interest of getting the order filled before our webcast is over. But obviously, there are risks associated with placing market orders. We might not be thrilled with the price that we have to pay. But for our limit, we were thinking if we get up to 1390, that would be our price target. And then if we slip back down into the trading range around 1305, there's our stop. We're going to make both of those sell orders good till canceled so they don't just expire at the end of the day. Art says, can ThinkScript identify a 5-day squeeze? It could. Art, I'm not your ThinkScript guru. But yeah, I know enough to know that it could do that. I'm not going to illustrate that today. But that's the plan. We're going to buy the stock. Let's see if we can go from around to where we are, get up to 1390. If we do, we're going to sell. If this TTM squeeze happens to fail down to 1305, we're back inside of our previous trading channel and we're out. So let's click confirm and send. Going to buy 4 shares at the current market price. And with market orders, prices can change quickly in fast market conditions, resulting in execution prices that can be different from the quotes displayed at order entry. We're going to try to sell at 1390 as our limit order, or we're going to sell with a trigger at 1305. That's our stop. But with stop orders, there's no guarantee that the execution price, the amount that's actually received on a stop, will be equal to or near the activation price, in this case 1305. No commissions on this trade, but there can be in other types of trades. But let's send this order off, and we just bought 4 shares. We'll see how it goes. All right, so everybody, did I miss any questions? I don't think I did. Ben is fabulous at checking up on these. So Stephen, ZenK setting on the TTM settings, how we use the Keltner channels. It seems the default is 1.5. Is that 1.5 ATRs? I'm going to have to double check that, Stephen. Let's see, what else do we have? Chris, thanks for the scan there. That's interesting. All right, what else? I think that's it. You know what? I never even said, what does TTM stand for? It stands for trade the money. Doesn't mean it doesn't make any difference, but somebody might be wondering, what does TTM stand for? Trade the market, sorry, trade the market. But guys, time for me to let you go. We've accomplished what I set out to do today. So we took a look at the markets. We followed up on last week's trade, which is doing okay. we spent the bulk of our time talking through how the TTM squeeze is built, how it might be used to plan and place a trade, and then we planned and placed an example trade. So got it all done. This is what we do on Fridays. If you're interested in charting and maybe taking that skill set to a higher level, then make sure that you're here on Fridays. Also make sure that you have subscribed to our Trader Talks channel, as I proposed before. You can just pop down below the video window right now, click on the subscribe button. It only takes a second. It doesn't cost anything. But our Trader Talks channel is where we house all of our previous playlists of our completed webcasts. You can find those all right there. You can search them right here, and you can join our live streams right there. Also, make sure that you're following Ben and me on X. Doesn't cost anything to follow us, and it's the best place to connect with us in between our live streams. That's where your coaches post even more educational information that isn't dependent upon turning on the camera and saying it. So, Jay Richardson, you say this gets a prize? Well, thank you. I appreciate that. I don't know what the prize is, but I accept it. Everybody, I'm going to let you go. Thank you for the thumbs up. I've seen, there are over 200 of you watching right now, and I can see that there are already 70 thumbs up. That's fantastic. To me, that sounds like applause. It feels like a pat on the back. It also definitely gives my webcast a boost in the YouTube algorithm. So if you're watching live and you like a webcast, make sure that you're clicking that like button every time. If you're watching the recording and you like that video, click the like button. They both have the same amount of impact, which is substantial. So click it. It only takes a second, but always appreciated. Ben, thanks for helping out there in the chats. Yeah, Ben says the recording for this one should be available soon, and it should. Yeah, every once in a while there's a weird technical glitch that might prevent a webcast from being posted. But other than that, the vast majority of our webcasts are added to the YouTube channel, found right here on the playlist. Okay, everybody, go enjoy the rest of your day. Have a great weekend. I have other webcasts every day of the week, so I'll look for you in my webcast series on Monday. I'll look for you again next Friday. I'll also look for you on X, but whenever I see you again, until that moment arrives, I want to wish the very best of luck. Happy trading. Bye-bye.